If you've ever looked at a company's financial report and thought, "What am I even reading?" You're not alone. A lot of investors and business owners feel the same way. Numbers, jargon, endless business segments, it can all blur together, making it hard to tell if a company's strategy is smart or just scatterbrained. Take Alibaba, for example. They do e-commerce, cloud computing, local services, the list goes on. At first glance, it might look like they're just throwing things at the wall to see what sticks. But is that really the case? Let's dig into their 2025 fiscal year report to find out. Researching a full business case takes forever. So let me plug this, AI Smarties. It's an AI tool that dives deep into business intel, perfect for product managers and entrepreneurs hunting for the full picture. First, the big picture. Alibaba released their 2025 results on June 26th, and the numbers are pretty eye-catching. Total revenue hit $137.3 billion, up 6% from last year. Net profit? $17.4 billion, which is a huge 77% jump from the year before. Let's break that down by business segment, because that's where the story really lives. Tmall Group, their main e-commerce arm, $62 billion in revenue, up 3%. Solid, but steady. This is their bread and butter. Cloud Intelligence Group, $16.1 billion, up 11%. That's a faster clip than the core e-commerce business. International Digital Commerce. Retail, think cross-border shopping, $14.9 billion, up 33%. That's a massive jump. Wholesale, $3.3 billion, up 14%. Local services, food delivery, etc., $9.2 billion, up 12%. Sinew, logistics, $13.9 billion, up 2%. Slow but steady. And for shareholders? Alibaba bought back $11.97 billion of its own stock, shrinking the total number of shares by 5.1%, and the board approved $4.6 billion in dividends, both regular and a one-time special payout. So they're not just growing, they're sharing the gains, too. Now, let's zoom in on the two biggest takeaways from this report. These are the bits that explain why the numbers look the way they do. First, AI isn't just a buzzword here, they're actually making money from it. You can't swing a stick in tech these days without hitting someone talking about AI, and Alibaba's no exception. But here's the thing, their cloud division's AI products have grown triple digits. That's over 100% for 7 quarters in a row. That's not just hype, this stuff is selling. What are they selling exactly? Tools like Lingma, an AI coding assistant that helps developers write code faster, answer tech questions, and even fix errors across multiple files. Think of it as a supercharged helper for building software. It's not just for show, either. Real companies are using it. Hintang, the big tourism group, used Lingma to build a virtual queue system that cuts down wait times for tourists. Garuda Indonesia, the airline, used it to move 85-plus virtual machines and 3 databases to Alibaba Cloud in just 2 weeks, with almost no downtime. They're also pushing hard on big AI models. In April 2025, they launched their Quinn series. Think of these as super smart AI brains that can do everything from analyzing data to generating content. They're open sourcing a lot of them, meaning anyone can use them for free, and it's working. Over 200 Quinn models are out there, downloaded 300 million times, with 100,000 plus spin-off versions built by other developers. That's not just about making money today, it's about locking in a role as a go-to AI player for the long haul. Second, they're not trying to conquer the whole world, just the parts that matter. Alibaba's going global, but they're not spreading themselves thin. Instead, they're focusing on specific spots: Europe, the Gulf, Turkey, emerging markets where e-commerce is still growing fast. How are they doing it? 2 main moves. AliExpress, their global shopping platform, is stepping up its game. They launched a choice service that handles everything: pricing, shipping, returns, so sellers can focus on making good products. In South Korea, that alone doubled their order volume. Local partnerships in Turkey, they bought into Trendyol, a local e-commerce platform. Now, Trendyol has 40 million plus customers, over 250,000 business partners, and 20 million plus monthly visits. It's even become Turkey's first decacorn, a startup worth over $10 billion. By teaming up with locals, they're not just selling to a market, they're part of it. None of this works without logistics, though. That's where Sinew, their delivery arm, comes in. They've built a global network that can get packages to most places in 72 hours. Fast shipping equals happy customers equals more sales. It's a simple formula, but it's hard to pull off, and they're pulling it off. So, going back to our original question, is Alibaba just randomly expanding? Or is there a method to the madness? The numbers say it's methodical. That 77% profit jump? It's not luck. It's their core e-commerce, Taobao, Tmall, staying steady, their AI/cloud business blowing up, and their global moves like AliExpress and Trendyol picking up steam. Even the smaller parts, like local services, are growing. Alibaba's not just throwing darts. They're building a system, AI to power their tools, focused global expansion to grow sales, and a logistics network to keep it all moving. And they're rewarding shareholders while they're at it. Will it keep working? That's the million-dollar question. But for now, their 2025 report shows that their complex mix of businesses is actually a pretty well-oiled machine. Sometimes, what looks complicated is just smart.